Now, the reason I'm looking for buys real quickly is because, in a sense, we are in this little mini buy program from this low to this high after seeing that it wanted to continue up from yesterday. Yesterday, I did wanted to see price keep going down lower to meet Wednesday's PM lows, but um, I'm trying to figure out what could have been the cause of it, but look what it did. It just started retracing back up again, and it didn't want to go down lower. Perhaps this is a higher time frame time distortion, um, or the hand actually came in and did it and pulled the price out of that logic. So what I am looking at now is this buy program from this low to this high, and we do have a cracking correlation based on these lows. Now, what concerns me about these lows is that they're not part of the old previous lows. There aren't any lows to refer back to that I know of. No, there are no lows that I can refer back to at this time. So what concerns me is that this low, although it's a good SMT, I'm not sure if it'll be a good reaction point for us to take prices higher. See, we have a low, higher low, low, higher low on the Dow and US 500, but on the US 100 we have a low, lower low. So that is something that's piquing my attention here. I mean, this could act as a protected low here, so we wouldn't want to see price dip down here probably. I say probably because these are some tough conditions. We're also seeing TGIF occur. TGIF, we zoom out for a bit, is this. If we delete this and head into our TGIF, you'll see that we have already met projections up to 70% of it retracement, even 80. And now this wick down lower, seeing a projection here. So a couple of consolidations. Add the fact that we don't really have much news today either, so not that much going. And there's a huge pressure on yesterday's 10 a.m. candle right here, this wick. I don't want to see this pierce through. It can pierce through and act as turtle soup to go up even higher, but I don't want to see it pierce through at this time simply because there's an important what I have here, an important swing low. Okay, the open flout for the 15U is from this low to this high, but the way it constructed this range, it's in the form of a type 2 dealing range. So type 2 dealing ranges tend to be dealing ranges that can cause a reversal. You see that after we opened up at 930, price wicked down to the external range liquidity of the 15U open flout range. And what are we seeing? I'm thinking of a purge and revert kind of pattern where we're using the external range liquidity based off the 15U to use it as a reversal to head up to higher prices. The idea is that it's going to go up to higher prices to tackle this buy side liquidity in the form of a turtle soup to continue prices going down lower, right? That's the idea now. So if I can draw out what it is that I'm seeing, I always lose this thing. I believe we're gonna tackle this buy side liquidity to head things down lower, unfortunately. But we also have this 30U bullish PD array that should be acting as support once 930 began. But after 930, you'll see that it's been acting as a premium array almost. An inverse breaker block, if you will. A higher time frame buy program. So we're looking for any lows here on this side, from this leg, from this A leg to B leg, to refer back to for a cracking correlation. We did see the New York lunch yesterday get treated as an SMT, so it was referred back to already. So I wouldn't want to see this get broken to or get treated to. So that's where I'm still having some struggles because this has to do with market symmetry, market intermarket analysis, right? You're taking two, in this case three instruments and comparing them to one another and seeing which one has the divergence. And right now, one of them tapped it, but the one that we're analyzing, the one we want to execute on, hasn't. So I need to perform more lab experiments in terms about what's the protocol or what can we expect to happen when the market that we're analyzing hasn't had that low met, but the other ones have. Especially in the context of a buy delivery program. So having no time to do so, and I think it's because we've already acquired these lows. So what's next under it? These lows. And if that happens, well, this can also be a good entry to continue to take prices up, going up higher. But although I don't want to see it, it's also still a possibility. And I mean, look at this. We've also met TGIF projections. I just don't know. It's a messy, hard read today. Remember, this leg from this high to this low is a type 2 dealing range for, so we're looking for it to expand higher. This low was referred when? Who hasn't and who hasn't referred it to yet? We have a low, lower low, low, lower low as well. But we have a low, higher low on US 500. So the moment we touch this at 939, we've created this leg, right? That's a type 2 dealing range already. See it weight close above 25% right here, the 943 candle. Set our entry to 25%, okay? And then see if that will be the cause to make prices go up higher. Nice. Now here's the thing. In this phantom leg, we're also looking for now old highs to be referred back to so that we can create a minor sell side delivery program that will take price to deeper discounts if it's still bullish to go down here. So that's why we have to now be a little bit wary and cautious about SMTs. So we'll see here that it broke this high, and it broke this high either too. So everything's still correlated. So I really do anticipate seeing now London buy side liquidity be taken as well. It's fine. If there was a divergence, then we can anticipate this being our minor sell side. We anchor our A point here. This whole leg is a phantom leg, and it makes itself manifest as soon as we make a cracking correlation. But so far, everything seems good to go. Also, I just noticed that the inverse breaker turned into support right here too. See that? These two candles. Houston, we may have a problem. Look at this. Low, high, lower high, high, lower high, high, higher high. Now, let's look at this a little more. We have this buy program from this low to this high, right? So we want to see price refer back to discount so that we can continue making forward. There has been no SMT here, right? No SMT, everything's correlated, so we anticipate the buy program to continue. Has it made any new? So from this high to this low, I will consider it a phantom leg. Phantom leg just means that there's nothing settled yet. It's just a minor retracement, and we're looking to see how price will refer back to old lows. The old lows that we're referring back to, nothing was really popping off except the London lunch sell side liquidity. Now the London lunch sell side liquidity was tapped. So because we have this buy program, we anchor our A to B leg down here, and then we use the 25% of it to continue going higher. Now that this, I guess, retracement, now that it's solidified, now we got to refer back to the old highs to see if we can make a cracking correlation to create a minor sell side delivery program, and see if that will make us have a high to react off to get down lower, to make price go into a much more deeper discount. All right, so it's a little bit past my curfew. I'm still anticipating these highs to be met before 11:30. That's kind of like the goal for this, goal to be met. Looking for that 11:30 to be met. It's external range highs. Um, Look at this mess that we created: consolidation or time distortion. The smart money is engineering shorts and long interest. Do we have any short interest right here? Yes, we do. Do we have any high interest? We still do. We still have that 12 a.m. buy side liquidity. So we'll see what unfolds. I still believe that we got to get up there before 11:30. If it doesn't, well, then there's that. I think it's the opposite happening. But for right at this time, I'm still favoring that side. This last entry idea that I thought of was that if we're still going to continue up going higher, we want to have that slingshot effect still. We have a type 2 reversal dealing range here again in the form of this high, lower low. So this range from this high to this low is going to be an anticipated reversal. So after 11 o'clock till 11:15, see it break above 25%, which it did. Okay, we retrace back down to it, spend a little bit of time in there, expand higher, retrace on it again, but we're still inside that level, and we're looking to see if that will take price up going higher, right? So we're still going to be inside this bullish bias. We got to find something in here inside of our balanced price range theory to get into something that supports the idea that we're going to go up higher. And that's the playbook that we currently have at this time. Like, this is the formations that we have at this time. So I'm going to take that long and see if that will take us up higher to external range liquidity. Look how many trades I took based on ideas that I've been theorizing. That's why I like to take them with a paper trading account. Okay, so you'll see that I'm down tremendous. So, I mean, in a way, it's good because that means I have lots to fix. But at the same time, ego came in the way. And like I was telling you all, trading in a market like this sparks up that energy in me that I want to go in there and trade even more because I see that there's a lot of opportunity, and there is. But at the same time, there's also a lot of fake out runs and consolidations, and sometimes I feel like I know what I'm doing, but I mean, the market just goes in there and slaps you in the face, right? Humbles you. So, all in all, pretty good analysis. Trying to get up to those external highs. This kind of threw me off a little though. This reaction above these old highs. We did get SMT on the first leg of NQ and ES, but we were looking for that to see if the price will create a short-term sell side program to go lower, and it didn't. Instead, stayed inside this consolidation range. So, anyways, we'll see what happens. Thank you so much for watching, and I hope you have a good one.